Assalamualaikum warahmatullahi wabarakatuh. My name is Marsha binti Abu Bakar. My matric number is D2321596. I'll talk about introduction of the monetary policy. The first one I got, the point is definition and purpose of monetary policy. It is a crucial financial tool used by a nation's central bank. Aims to manage the money supply, interest rates, and credit, ensure price stability, inflation control, economic growth, and exchange rate stability. The second one is role in achieving macroeconomic goals. Directs economic activity by regulating the availability and cost of money. The third one is the historical of the policy itself. Monetary policy theory developed with the rise of banking system and central banks. Before this, economies operated under the gold and silver standard, making control difficult. The fourth one is impact of the Great Depression in 1930s. Sparked the use of monetary policy as primary tool for economic stabilization, as John Maynard Keynes advocated for government and monetary intervention to fight unemployment. The fifth one is monetarist perspective in 1970s. Milton Friedman emphasized the dangers of excessive money supply growth. He has argued that inflation could be managed through careful monetary control. The sixth one is modern monetary tools and strategies. Central banks now use tools like policy interest rate changes, open market operations, reserve requirements, and most follow an inflation targeting regime to maintain economic stability. That's all from me.
Assalamualaikum. My name is Fazisha Nazmina binti Muhammad Nazri Hadi. My matric number is D23215970. Types and characteristic monetary policy types. Monetary policy. Expansion objective, promote economy. Expansion, how? Expand the money supply and decrease interest rates when the economy is experiencing a recession or slow. Growth impact increases investment, borrowing, and consumer spending. Monetary policy contraction objective. Lower inflation, how? Reduce the money supply and increase interest rates. When inflation is excessively high or the economy is overheating effect, slow down the economy and reduces borrowing and spending. Monetary policy characteristic. Central banks such as the Federal Reserve, European Central Bank, and RBI are in charge. Impact the availability of credit and interest rates. Financial markets are an indirect tool that affect the economy. Adaptable and faster to change than fiscal policy depending on objective. It may be either short-term or long-term. Thank you.
Assalamualaikum. My name is Nur Azira binti Azhar. My matric number is D2321594. I will explain about advantages and disadvantages of monetary policy. Advantages of monetary policy. Number 1, control of inflation. Central banks can raise internet rates to curb excessive spending and reduce inflation. Second, economic stability. Help stabilize the economy during fluctuations, stimulating it during recession or cooling it during booms. Number 3, flexible implementation. Easier and quicker to implement than fiscal policy. For example, government spending and taxation. Number 4, encourages investment and spending. Lower interest rates reduce borrowing costs, promoting business investments and consumer spending. And last, number 5, currency stabilization. Through interest rate changes, monetary policy can influence exchange rates and stabilize the national currency. Disadvantage of monetary policy. First, time lag effect. It takes time for changes to show real impact in the economy, sometimes making it ineffective during urgent crises. 2, limited impact during recession. When interest rates are already low, further cuts may not boost demand. This is known as liquidity trap. Not effective for structural problems. Monetary policy can solve deep-rooted issues like unemployment due to skill mismatches or weak infrastructure. Number 4, may affect savings. Lower interest rates reduce returns on saving, discouraging savers, especially retirees. And the last one, risk of inflation. Excessively loose monetary policy can overheat the economy and cause high inflation. Thank you.
Assalamualaikum, and my name is Putri Rasmir binti Zaha, number 3D23215979. For the monetary policy is how a central bank control money supplies and interest rate. The goal is to keep the company stable. For example, Bank Negara Malaysia control inflation and support growth. For the effect of monetary policy, interest rate number 1 is interest rate. Lower interest rate make it easier to borrow and spend. Higher rate slow down spending to reduce inflation. And number 2 is price stability. Monetary policy helps control inflation and keeps price stable. And the second one is exchange rate. High interest rate attracts foreigner money and rise the currency value. Low rates make export cheaper. And number 4 is employment. Supportive policy helps business grow and create more jobs. And the last one is investment and consumption. Lower rates encourage people and companies to spend and invest more. And for challenges of monetary policy, number 1 is time lag. One big challenge is that monetary policy take time to show its effect. Make today might take months to impact inflation. Number 2 is global influencers. International factors like oil prices or interest rate in other country. Number 3 is liquidity trap. Sometimes, even when interest rates are already very low, lowering them further doesn't help. And number 4 is market expectation. If people don't believe in the central bank policy, they might not respond. And number 5 is conflict with fiscal policy. Sometimes, government spending might go against what the central bank is trying to archive. And number 6 is structural economics issue. Lastly, monetary policy can solve deep world economic problems like income inequality or corruption.
Conclusion. Monetary policy substantially contributes to economic stability through adjustment of inflation, forming job markets and provision of lasting economic development. Central banks control the flow of the money by using such instruments and adjustment in interest rates, open market operation and adjustment of reserve requirements. Monetary policy has promised to be successful in short-term economic shifts, but if need to be used with caution. When misused, it can lead to such an undisturbed effect as assets bubbles of further rounds of inflation. Overall, then, it is a vital tool for government in keeping macroeconomic stability and guiding national economies towards consistent growth and prosperity.
Assalamualaikum and hi, my name is Nur Farhani Sofia binti Jamil. My number metric is D23215972. Okay, and for the recommendation, is it of the essence that policymakers send effective monetary system that will maintain emphasis on economic growth, yet accurately maintain an issue of stability of price. high representative of policy making in central banks and must monitor significant statistics of economies such as inflation, rates of employment, and GDP, so that they could respond properly and use strong data for reshaping policy. In an economic recession, we need to implement an accommodative policy of, for example, slashing interest rates in order to encourage demand, but when the pressure of inflation arrives, we need to use the contractionary method to sustain a level of price stability. Besides, by keeping the message clear and open, central banks can support public trust and impact the market's understanding of them. Coordination of monetary and fiscal policies is critical to the creation of long-term economic stability. Thank you.